Greetings and welcome to this latest episode of Geostrategy in Action by ey-Parthenon. This is a series bringing together global and local thought leaders to talk about geopolitical developments and how they are impacting organizations, and most importantly, how they are responding across both strategy and execution. Today, we are going to talk about the conflict in the Middle East and how that is impacting financial services firms, what their responses have been, and what executives will continue to be thinking about amid continued uncertain global environment. My name is Adam Barbina. I'm the US Geostrategy Leader at ey-Parthenon, and I'm pleased to be joined by our Global and America's ey-Parthenon Financial Services Leader, Andre Veissid. Andre, thanks for being here.
Thanks so much for having me.
Andre, I first want to acknowledge, that we continue to be in a period of conflict with real humanitarian implications, and so it is important that we acknowledge that. As we record this, the U.S. and Iran continue to exchange proposals around a potential resolution to the conflict, and we continue to see low level of kinetic activity persist. The scenarios that our colleagues have put together tell us and they underscore kind of the fluidity and the real uncertainty around these challenges. And so I very much look forward to having this conversation with you today. And two things strike me as preparing for this conversation. One is that we've always known that the duration of this conflict, would really lead to kind of downstream implications and further downstream implications, particularly those that are uneven. And two, the overall level of kind of uncertainty or volatility that we're seeing, which brings itself out into market volatility, into FX, into risk premia changes that we've talked about previously, Andre, which brings me to financial services. And you are talking with executives both globally and in the US as we talk. And I would like to just kind of open the aperture here for you to share what you're seeing and hearing. How are financial services institutions kind of interpreting or integrating this type of conflict into their businesses? And what are you really seeing and hearing from the sector?
Yeah, no, that's great context. And look, from a North America financial services perspective, which is where I'll focus today, I think the headline is that this is not a systemic threat to North American financial services. I think the crisis is a meaningful one for all the reasons you laid out, but it's largely an energy macro crisis. It's not a financial crisis. And we've lived through that pretty recently. So there are a number of reasons why we see it as, again, as an important factor in markets today, but not as a systemic risk. And one primary reason, again, is it's largely energy. It's not coming from within the house. It's not a financial products crisis. It's not really driven from within financial services itself. And therefore, most of the impact that we're seeing are downstream. It's second or third order impact that's having an impact on U.S. financial service firms. The second is that the industry as a whole has built up a decent amount of resilience, just given the fact that unfortunately, we've had to deal with a number of crises over the past 10 to 15 years. And if you look back at the financial crisis of 2008 to 2010, you look at COVID, and then you look at some of these non-direct financial crises that have occurred, if it's war in Russia and Ukraine, if it's the sanctions kind of noise from last year, we've weathered the storm pretty well. And part of that is because we've built up playbooks, we've built up resilience. And so when there's an event like this, that is coming from outside of financial services, it has an impact on FX rates, as you mentioned. It has an impact on inflation. And we're starting to see that trickle through. That's more a broader economy issue. It's less a financial service issue. And in fact, in some of these cases, you're seeing banks and their capital markets trading desks having tremendous years because of the volatility. So it's not always on the downside. There's also upside opportunity for the financial service firms.
Also, I think we understand, that these institutions don't operate in a vacuum, which brings me to a question, of kind of widening the aperture just a bit more, is how do you think about competition? How do financial services firms, remain competitive in this type of environment, given that we're seeing such dispersion of impacts across the globe? And how do you see them kind of staying competitive? And what are executives kind of thinking about in this environment?
Yeah, and maybe I'll take that in two parts. One is because financial services is a broad category. I'll talk about that from a bank perspective and then also talk about it from a wealth and asset management perspective, because there are key differences there. I think on a bank perspective, when thinking about competitive dynamics in this type of environment, number one is just kind of securing the boat, making sure that the fortress of the business itself is as strong as possible. And so that's really about capital. That's about balance sheet. That's making sure that your risk controls are in place. And again, a lot of this is playbook material that's been prepared over the past number of years. They've been tested through these different crises. And the resilience is pretty high when it comes to banks, right? But being vigilant and making sure that you've got a forward-leaning approach towards risk management is certainly important and critical, especially when things move so dynamically. I think on the wealth and asset management side, it's really understanding what's the impact to your end customer, right?
Mhm.
What is the retail investor feeling? What are the pensions feeling in terms of concerns, risks? It's a little bit more of an understanding of what the risk appetite is for your clients, what their exposure appetite is, and making sure that you can meet that while at the same time making sure that all the risk and controls are in place from an operations perspective. And again, what we're seeing is on both of these sides that if you do have those kind of critical factors in place, there's actually an opportunity to win market share right now. There's a lot of volatility. There's a lot of money in movement right now. And you're seeing it in both the equity markets, in the debt markets, in the private credit markets. There's a lot of activity. And when there's activity, there's opportunities for those that have the best, most secure business to really take market share.
Looking forward then, I mean, how and what are you hearing from kind of executives and boards in terms of priorities for financial services firms? And where do you see maybe kind of the next kind of level of focus and what do you think that will be?
Yeah, I think, there's definitely a focus on, I would say, these tactical risks that we're seeing, right? And what the downstream strategic impact could be from these risks. Like you said in the opening, it's a bit unclear, where this will all play out. And there could be kind of near-term risks that it get extended but kind of peter out, or there could be, if this prolongs for a while, longer-term structural changes in terms of the flow of energy markets, the impact on financial services, and the inflationary kind of environment that we're in, again, globally, and how that impacts the U.S. as well. And so I think there's a kind of a laser focus on that, but I would say that's even overshadowed by some of the just structural mega changes that are happening, the mega trends that are happening in the market. Everybody talks about AI. That is the topic du jour. And even when you walk into a financial services conference, if it's banking, if it's wealth and asset management, and you're talking about what we're seeing in the markets today, inevitably AI gets discussed with a 80 to 20% kind of ratio over what we're seeing on kind of some of these more tactical market dislocations, given crisis in the Middle East right now and other things like that. I would say that boards and senior executives are really laser focused on the impact of AI upon their businesses, and then trying to manage through the day to day with all the various trends that we just talked about.
Yeah, Andre, maybe to bring us home here, right, in terms of kind of looking at kind of the new technologies, as you mentioned, kind of AI, but also kind of the ongoing uncertainty in the Middle East and broader geopolitical conflict. How are you thinking about or what new needs to be done around scenario planning and stress testing in an environment, which to your word is the du jour tool, right, in terms of managing through uncertainty? So how would you leave our viewers of what needs to be done there and maybe what you're seeing from leading companies?
Yeah, I think, scenario planning is back in a really big way. And we're seeing it driven again by some of these events that are happening with increasing frequency on the global stage that are impacting different parts of the globe in various ways. But given the interconnectedness that we have as markets, is going to have an impact on your business, especially in financial services, which is a global market. Having the flexibility and agility that scenario planning allows for, again, not predicting the future, but being prepared for a number of different paths where we might go down, is back in a big way. And I would say the second part is the overlay of the uncertainty of the impact of AI and all the places that will have an impact, and really thinking about AI not as a new tool that can be plugged in and provide more efficiency and more effectiveness, but really a new utility, almost like electricity, that's going to be plugged in everywhere. How do you scenario plan for that, right? Both on the cost side, on the optimization side, but even more difficult on the upside. It's easier, not easy, but it's easier to see all the things that exist today and how they will be disrupted. it's really difficult to see the things that don't exist today but are coming. And the ability to start planning for that and what are the second order impact and implications of that for financial service firms, again, in banking, wealth management, and asset management, and insurance, everybody is trying to figure out, looking into their crystal ball, not to make bets on what the future will look like, but be prepared so that they can win in whatever environment comes out of this. And so if I had to leave on one note, it's really that scenario planning is back in a big way. And I think the focus on both the near term and longer term implications of some of these trends is going to be front and center for executives for a while to come.
That's really well said, right? I mean, I think there's an art and a science to this scenario planning, right? And I think flexing both those muscles is increasingly important in this environment. I want to thank you, Andre, for joining us and for this insightful conversation, and our viewers for joining this latest episode of Geostrategy in Action. We welcome your feedback and look forward to seeing you next time. Thank you.